Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Okay, it's time to look at gold and silver again, and we've actually got something to talk about this week. If I'd known that bitching about sideways price action would have brought it to a conclusion, I would have done it sooner. Now we have broken out of this downward trend and we're moving higher. Now this is the old alternate count. I downgraded this bullish count into an alternate because, as I described in my own words, I felt it was becoming ridiculous, and I honestly think it is still a little ridiculous. It is still legal and it is still therefore viable, but it is a little ridiculous. I say that because there are simpler ways of explaining what's going on. Okay, there are simpler ways of explaining what's happening. So although this is still valid, we can keep it as an alternate. The idea that we've gone one zigzag into two, one flat into two, one flat into two, and now we're going up. Sorry, I missed a 1-2 there of a smaller degree, but you get the idea. So if we just turn this off for a moment and we'll come and have a look at our bullish count that we updated last week, which was the triangle. Okay, we've got an A, B, C, D, E, complete, 1, 2, and then now we're out of here. Right, so we've got one level left to break here, the B wave top at 1917. Get through that convincingly, even if we come back, that's a potential trade setup. That's how I'm viewing it. Now the reason why is this level important, Tom? We've broken the triangle, surely we're done. A, B, C, D, E. Well, triangles tend to last a lot longer than we expect them to. And there is another way of looking at this, because we've come back to this level and reversed. Right, we haven't necessarily plummeted yet, but we are showing signs of reversal. So by the time you get this video, this issue may have been resolved. We may have collapsed from here, we may have gone through it. So let me explain what the issue is. Let's just turn off this triangle for a minute and let me show you this. Now this is what we call a barrier triangle. Okay, this can cause an optical illusion where you don't appreciate that this line is a straight line. Okay, it's not trending up, it is very marginally trending down. But it is essentially a horizontal. You know, that's the point. We can place it and make sure it's actually horizontal, like so. Now with a barrier triangle in the Elliott wave principle, we are told that the B line and the D line are the horizontal. They're straight, whether on the top side of the triangle or the bottom. Okay. So if this is what the non-Elliott wave analysts would call a rising triangle, right? If they weren't aware of the Elliott wave terminology and the way it's counted, but in Elliott wave this is called a barrier triangle. So we've got an A wave, we've got a B wave, we've got a C wave. Now we can see a potential for a double zigzag here, and therefore this could be a complex in the D, which is exactly where we'd expect to see it, in the D or in the E. E tends to be quite short and brief though, so if it's going to occur, happening here in the D is the perfect place. E doesn't have to come back to the trend line, but it's not invalid until it goes beyond where the C is. Okay, so we're just going to leave it at the trend line for now. That's not an assumption it's going to come there, but our point of control, depending on how much visual price data we're taking, is roughly sat in and around the middle of the triangle. If we're taking a little bit less price data, let's see. In fact, we have to take in a bit more, I think. Yes, if we take in more, we can see that we get pretty much the middle. Taking a little less, drops a little bit, but either way, it's within the bounds of this triangular pattern. Okay, and it has been tested and played with multiple times. So you know, right here, here, and here, here, all this here, back test here, and back test here. So we've been coming back and forth for point of control within a triangle. So in that sense, the initial bullish count looks good. But this is the last barrier, because it could literally be a barrier triangle, forgive the pun. So get through this, we're golden from a bullish perspective. Reverse here, likely got another 3-wave move before coming out finally and completing a barrier triangle instead. So there you go. If we come through this, that would be the last and final thing. I wouldn't have to consider this, but I'm going to consider it immediately after my bullish count. I'll give the bullish count primary, but if we do reverse, this will be the next thing I think is happening, purely on the basis that Elliotticians and all analysts tend to underestimate how long triangles last for. So it makes sense to extend it out a little further and have to suffer it a little longer. You know, it's just the way it is. Okay, but it's a bit of a complex and interesting pattern either way, because the A wave, it seems to be disproportionate to the rest of the triangle. Because of that, we do have a bearish alternate to consider as well, which we can talk about now. Okay, so I'm just going to go through these and make sure I've deleted any ones which aren't relevant. This is an old bearish count which is now invalid, so we can dump that. Bearish triangle, A into A, B, C, D, E into B, that's now invalid, so we can dump that. This one. Okay, so here's a bearish way of looking at things. Okay. So somehow, and I can't really figure out how, we'd have to get down here in emotive wave, but it, to me, just doesn't subdivide as one. You know, I can't really see it. If you said this was A, B, C into 1, this was A, B, C into 2, well, then this 3 is shorter than the 1, is it? I might be making assumptions there. It is shorter, so the easiest way to label this would have been to go 1. Hang on, let's try this again, Thomas. That's the one we're saying. 1, 2. So the 3 here is significantly shorter. Right, so we can't use either of those as a zigzag. We can't go, this is a 1, 2, 3, 4, 5, because then we end up with a 3-wave pattern anyway. Right, so we've got to get down to here in a motive wave structure. So we could go 1, 2, 3, 4, 5. Well, it's contracting until we get to the 4th and the 5th, at which point it's expanding, but the 3rd wasn't long enough. So I can't get down here in a completed diagonal, but what I think I can do is get down to here in 1, then have an A into a B into a C. Okay, so that's what I'm going with. I'm going to say that this is an A, B, C. So the only way we're going to get a retracement, I think, let me think about this. We could have it as a subwave of a 2. How about that? Because then we could still get a flat with a B wave triangle. So let's get rid of the 1 and the 2, since we can't square the circle there. Okay, we can't square the circle there, can we? So we've got A. Am I just wasting time considering that? Let's consider the bigger picture for a moment. You'll have to bear with me while I'm just working out an idea. So A to here, 3 waves. We've got to get back to 90% if we've got 3, or we're dealing with WXY, which we could be dealing with WXY and a funky X wave. Okay, this is a zigzag, and then we're going to get another zigzag. But if we got an adjoining triangle, then it's getting very odd. Very drawn out and unnecessarily bullish way of creating a bearish pattern. If we wanted to just break down, we could just break down and get it over with. You know, so I'm not saying it has to do that, but we can get 5 into here. So we could say now A, we could say B, we could say C. Alright, so we've got zigzag into a zigzag for a flat pattern. I hope I'm making some sort of form of sense. This becomes the B, right? And then this whole thing then comes down in 5. Which is, that just seems unnecessarily convoluted to me. I mean, that's just, doesn't look like a double zigzag. It doesn't look like a zigzag. It looks like a sideways move. So the zigzag and the zigzag here, or sorry, should I say the zigzag and the zigzag here, this would be 5 waves in the C. So this just creates a big flat pattern. Big sideways flat pattern. I guess it's possible, but you know, it's got to make 90%. So let's just put that on the board. Eyeballed it pretty well there. So we've got to come back to 90% anyway for this to even be legit. So we've got to rally up to almost the previous highs. So I'm just going to say this is flat. Awkward flat, I don't know. big flat. There we go. So there's one potentially bearish count. Now, like I said, for me, I cannot get this to come back into a 2. You know, I had that as potentially a 1, A, B, C into a 2, but I just can't get this to work. No, I just can't get it to work as a 5-wave motive structure. So I don't think that's on the cards, to be honest. Now, is there any other way? I guess we could use the barrier triangle that we've got here. So we could say, what could we say? So we get A, B, C, D, E. Okay, let's present one more idea, just because it's nice to have options. So let's present the barrier triangle again, but this time let's put it in as a subwave, so we can get 3 into A. Now you see, it's not going to work. We'd have to be W, okay, because we need 3 waves. So let's say W, A, B, C, D, E, X. Oh, clicked on the wrong button. W, X, Y. Great. A, B, C, complex in the C, D, E. Not ideal place to see it, but better later on than early. And C is later than B, and B is later than A. So there you go. So you can get a complex, a triangle in an X wave with 3 waves here. Alright. This would be minor, this would be intermediate. Sorry, let me just actually select the correct ones here. This would be minor. Right. And then finally another zigzag. Something like that. So we can get lower off the back of this. And what are we going to call this? Triangle X. Sublur. I can't even spell today. Yeah, let's try that again. Double. Zigzag. Triangle X. No, X Thomas. There we go. Right, so there's a whole bunch of alternate counts, but the bullish one is the primary triangle. The primary bullish count is this triangle. See this level break would be ideal. Move up, move back to trade in long. Okay, and we can consider wave 4 complete. Then we've got, if we do reverse here, we have to consider that the barrier triangle is in effect, and we're going to get one more move down before coming up, so we have to watch that level. And if for any reason, I mean, this is a problem with the big flat, we've got to come up to 90, so I guess maybe be on guard around 90%, but we can't say anything other than that because it's just not a particularly convincing structure. And this, well, this will turn around at the barrier because it's the wrong way around at this point. See what I mean? Got the B and the D on the rising side and the A, C and the E on the flat side. So this is just doesn't look right as a triangle. Barrier triangle should be B, D on this side. So W, X, Y. They're all possible, I guess, but they all seem less likely than just having completed. And then immediately after that is the same bullish idea, but we just shift everything over to accommodate a longer correction. See what I'm saying? Right. So we've still done A, B, C, D, E, triangle, and we've still done 3, 4 instead of 3, 4. Right, so we've got one more move down before we come out. I prefer both of those. I prefer them over the bearish count or any of the bearish interpretations currently. So bullish for the meantime, more bullish if we break that high. So I'm just going to look at things. If we reverse from here, barrier triangle. If we go significantly lower and break this previous low all the way down here, then it's bearish and it's something else and we need to come back to the drawing board. So that's that. Now before we look at anything else, we'll go on to look at silver. Let's just have a look at the longer term situation for a moment now that we've got the count turned off. Now I should have a pitchfork here somewhere. Yeah, here we go. So based off of this initial pivot, we can see how incredibly strongly this 38.2 level has been playing with the median line, and it's just more of a coincidence that we've got this horizontal structure coming in here, right? Because this is a 50% fib test on the pitchfork here, this is a 50 here, and then we've kind of channeled between the 38.2 and the median line, operating as running resistance and support. So you can see how reversing from here again could find the E back at the 38.2, accommodate, sorry, it's got a bit wonky, accommodate a triangular structure while still using long-term support and resistance. You could easily fit a triangle in here, is what I'm saying, with the shape of the pitchfork. Okay, so you've got your lower trend line, which is the 38.2 and the 50 back here, and you've got your median line test and 50 back here, and that forms your horizontal. It all fits together with retesting support and going higher again. But if we break out, take out the take out this high here, then I think we're going to run straight to the 38.2. Maybe we'll then get a pullback to the median line, and that will be another buying opportunity going up. Okay. Alright, let's have a quick look at the RSI here. So, triangle pattern clearly in place here, but so still is that barrier triangle, right? That's still in place as well. So, they're both at a point of flux, they're both legitimate at the moment. So, if we take the long-term pattern from the top here, we can get that kind of triangle shape going on. But I think those two levels in the RSI now lining up nicely. This is overbought. This is a good time to turn around. So that lends some credence. Rising lower lows continuously though this whole time, supporting price, supported by this 38.2. So for the meantime, I feel quite bullish about that. I just want to see either a reversal to get that final E or a break of this level and a thrust higher. Right, so I'm going to leave gold there for the moment. Let's come over and have a look at SLV. Now this is a little bit more confusing. So yeah, right, like I was saying, complicated. Summing it up, we are a full wave behind gold. We are in a 2, gold is in its 4. We're yet to do the 3. That's the wave in between us. Right, so 3 in silver has yet to happen. So we're going to break out significantly higher. Okay. Now, I did have it suggested to me that this whole thing could be a triangle like gold, and I said, well, if that's the case, then it can't be a 2, because you can't have a triangle in a wave 2. Okay, can't have a triangle as a wave 2. Understand? So for the moment, I'm still expecting this multiple zigzag structure to play out. Triple zigzag we got going on here. We've got one zigzag joined to another zigzag joined to another zigzag, with a zigzag in this X wave and a WXY in this X wave. So it just keeps trying to get us lower and lower and lower. Every time we rally, it tries to push us back down with another zigzag pattern. And for as long as we remain below these levels, this is my preferred count. It doesn't have to be doing the same thing as gold. Okay, gold went to new all-time highs, silver didn't. Okay, so it's evidently not in the same place. I think it's a full wave behind. Okay, so I'm still expecting this to unfold lower. Now if it doesn't, I need to figure out how it bottomed here. Okay, because we have a 3 wave move here, not an impulsive move. This is not 5 off of the low, that's 3. So we're not impulsing. Alright, but we've come back lower and now we're moving up. So for me, this still feels corrective. So can we live with gold racing away, potentially, while silver continues to correct lower? Well, if this is correct, we're going to have to live with that. And silver has been massively subdued while gold was rallying. Okay, gold managed to drag itself to new highs. silver didn't. Okay, silver bottomed in 2020. Silver bottomed in 2020. Gold bottomed in 2016. Okay, so that's 4 years lag between the two of them. Okay, so we just can't assume that they have to do the same thing, because they haven't been doing the same thing. Alright? So that's that point. Now if we break these, I'm just going to have to think of something else. Now, hold on to your hats, because we're going to discuss that now. Because the guy who suggested to me the idea of this being a triangle, it's up for debate, opens up a can of worms. So let's discuss that can of worms now. And if we want a very bearish count, we can produce one. Okay, now I'm still expecting a thrust down to fill these gaps, get to the 61.8, final move down, and then we can rip out of here. But let's consider the possibility for a minute. Now this is up for debate, because Elliottians, Puritans and otherwise are going to bitch and argue with one another about this. Can a barrier triangle break the trend line? Right. Well, in my mind, the setup required to make this a triangle would not make this a valid barrier triangle, because we couldn't have our B and our D wave down here. These would have to be our A, C and E waves. Now let me explain what on earth I'm talking about, because I've probably lost you. Okay. The most bearish interpretation I can imagine is that this is corrective to the prior bull market. So that this is A, this is B triangle, this is C. Boom. Okay, now still big time upside for silver, but this would be the most bearish interpretation, right? But the reason I don't like it, first of all, we breached this triangle multiple times. Okay. So the idea of it being a barrier triangle is very iffy. The next problem we've got is our A. See, how do we get our A and our C and our E are on the wrong side of it? Our B and our D should be on the flat side. Now this is how we get it to complete at a low and go higher, right? But then we've got this issue of a lower low from this low and this barrier being broken. So I don't like this, to be absolutely honest, but you know, it did get me thinking, is can we interpret it as corrective? I think as an exercise I put that to rest now. So if anybody is thinking that, fair enough, if that's what you want to support, but I'm not convinced, so I just wanted to put a dampener on that. Okay, now what else have we got here? That's no longer relevant. Okay, that was no longer relevant. Base support is still holding. That's the overall count that we've adopted. 9 reverse pitchforks are relevant now. I'm just having a quick tidy up. 61.8% golden ratio, sat down here, right around all this previous support. So for the meantime, I'm just sticking with that. I'm sticking that we've got another move lower. Just another move lower to come. Maybe gold's going to make a thrust and then correct, and that will be the final thrust down for silver, possibly. I don't know. But until we break those higher levels, get out of this downward trend, break these levels, which we put up here, okay, then I can't really be certain. I can't really support any other count, because I don't have a clear impulse off of the lows, right? I've got what looks like a free wave move, and because of that I think it's further corrective price action before heading lower. Alright guys, excuse me, my voice is still playing up a little bit. I was ill last week, hence why we haven't had many YouTube videos. Bear with me. Sorry about that, I had to pause the video. My voice had gone completely for a moment then. Alright guys, thank you for joining me on this technical analysis of gold and silver. I hope you've enjoyed it. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. As always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Please consider leaving it till the start of next month now, so you get a full month's value out of it. And if you're not following me on Twitter yet, there's a link to my Twitter feed also in the description box below. Alright guys, take care, and I'll be back with you later in the week. All the best. Bye bye.